Good morning. Welcome to the morning market briefing. Today is Monday, April 6th, 2026. I hope you're doing well. First full week of April. I'm excited to get into it. We've got a lot to get to. I wanted to talk on Friday. I was thinking we'd really be talking a lot about the jobs report. That's something that we definitely talked about in the market memo that was sent out on Friday. But we really had a lot of updates on the war front as well over the weekend, so we have to do some updates, and we'll get some more at 1 p.m. today. Some interesting thoughts, especially as it relates to the economy, which we want to obviously emphasize how it all plays into how things are going with markets and the economy, et cetera. So let's just start off with the weekend update. Two big stories, I would say, three big stories over the weekend. Number one was the successful extraction of two downed U.S. airmen deep in Iran. One being extremely difficult to get to. There was hundreds of people mobilized. The CIA ran a deception operation to try to lead the Iranian defenses away from the site. Israel bombed sites close to the area to help with the evacuation effort. The colonel was injured and went up 700 feet. I mean, it was really the stuff. They're going to make a movie of this, but really very impressive what the U.S. military was able to do in terms of this evacuation. So that was very good news. President Trump will have a press conference today at 1 p.m., which he'll talk about this, as I imagine he'll talk about other things. And I'm sure you've all seen the tweet by now, or the truth. But basically, Trump yesterday had a very nice, positive Easter message for everybody. And we're showing it up on the screen, but basically saying that we're going to blow everything up in 48 hours. And they said, praise be to Allah. So that was Sunday morning, Easter morning, 8 a.m. So very nice, positive vibes that were just flowing from the White House to everyone's lovely Easter morning. So what's very interesting here is that it was conditional on the strait, not a strait being opened again. I would note that on Wednesday, one of the things that I noted was that Trump did not lay out opening the strait as an objective for the war. And now he's basically saying, unless you open the strait, we're going to bomb you until kingdom come. So Thomas, joining today, has anything changed, or is it just same facts but different kind of background?
You know, for me, I'm definitely just looking through the noise a little bit last week. I mean, I think that the plan for no Hormuz opening was kind of a little bit of a classic Trump bait and switch. I mean, it would be a disaster for multiple levels of the economy if we didn't get this strait open. So I don't see anything new. Honestly, from kind of what I've been seeing the last couple days, I just haven't really seen any incremental increase when it comes to how are we going to militarily execute opening the strait at all. But I'm sure we'll definitely see some exciting things tomorrow that might bring some more insight to that.
Notably, even with that tweet, he had said 10 days, and the 10 days would be up tonight. Then he said 48 hours. So even though the language used was extremely aggressive, he actually extended the deadline by another 20 hours. So some people were having a little bit of, I guess, morbid fun with that. I don't know if you can have fun with anything with this stuff going on, but in terms of talking about it, it's just not a great situation all around. But the IRGC intelligence chief Majid Kademi was killed in a strike over the weekend. And it looks like they are trying to pursue peace talks. There's Axios reporting saying that there's a last-ditch effort for a 45-day ceasefire, but the chances are slim. Talks are being conducted through Pakistani, Egyptian, and Turkish mediators, and also through text messages between U.S. envoy Steve Witkoff and Abbas Araghchi, who is the foreign minister. Interestingly, the Japanese are also talking to Abbas Araghchi. and saying, essentially, take me to your leader, to paraphrase Hubert Humphrey. And they're saying, but I don't know who that leader is. So the Japanese kind of want to work out a deal. And obviously they do, because 90% of the oil that they get is through the Strait of Hormuz. But I don't know who that would be if it's not Abbas Argachi. So
was Japan rated as one of the friendly countries on there?
It was not.
Not a friendly country. So. Okay.
Yeah. I don't know what the rating was, but I don't think it was a 1. I think it was closer to 3, 4, 5. So we've got that going on. But Hormuz traffic is actually coming back. And this is where Citrini comes back in. So remember Citrini, Thomas, from a couple months ago. And I know you were keyed in on it, even though you weren't working here at the time. But they came out with a big fan fiction almost of what would happen in June 2028 if AI just took over the world and people lost jobs to AI. That was their big report. And I thought it was very well written. And I thought a lot of the things that they said could come true, even though it was definitely the bearish side of what could come true. So they're out with something else. And this time, they're not just making it up. They actually sent an analyst who speaks 4 languages over to Oman. And he got on a speedboat, started taking pictures, smoked a cigar in the Strait of Hormuz, was counting ships as they went past, ultimately got detained, and then after hours got released, and then found his way back to wherever Citrini's offices are in the United States. Kind of gave his whole summary. And his conclusion was Iran is in control of the strait, but a lot more ships are getting through than people think. Part of it is they're just paying a toll, but part of it also is they're turning off all the trackers. So all these trackers, this was, I think, the big thing from the investing side point. All these Hormuz trackers that is watching all these ships go through, and you've seen the green arrows and the red arrows going through the strait. They'll show it up on TV. I mean, there's a website called, I think, HormuzStraitMonitor.com that has it all. And it's all fake because a lot of these ships are just turning off their tracking or they're spoofing their location. Many things going on. Essentially, when you actually go there are far more missiles being lobbed in and hitting from Iran into U.S. bases than apparently is being reported, according to these guys. And then B, there's also a lot more traffic going through the strait. And I think we're starting to see the impact on oil markets. But maybe comment first, Thomas, on anything from Citrini that you've any insights that you might have there, and then we'll talk about the impact on oil prices.
Yeah, I mean, you touched on most of it, but definitely, I mean, this is absolutely a wild story. I think that he got searched as soon as he landed as well, with a bunch of hidden cameras and stuff, and didn't get caught with his he had a super zoom camera on his phone or something like that. But I like a lot of the stuff these guys do, and this was definitely an interesting take on the current situation. I wish we had access to the full report.
But I do think that this is where having the profit incentive on investigative research is incredibly important. And I think that we don't have that in kind of traditional journalism. We don't really have that even in law or documentaries. You don't really get that upside from the people on the ground. This guy was, I imagine, being very handsomely compensated for putting his life at risk. And there was a massive profit incentive to having some sort of edge on what's actually going on the ground. And we saw the same thing with Valiant Pharmaceuticals. I mean, what Valiant Pharmaceuticals was doing, they were doing for years and years and years. And it was Bronte Capital, a hedge fund out of Australia, and another research outfit that actually ultimately shined the light on what was going on at Valiant, and then finally was picked up by the New York Times and things like that. But it was ultimately a hedge fund that blew the whistle on it. And you think about even to the 2007, the Big Short, and how a lot of hedge funds with the profit motive had actually asked the questions and done the investigative research where no one else had. and no one else had because there was no profit incentive. And I do think that, we're kind of in an advantaged position to understand what's actually going on because there is a profit incentive for a lot of people in our industry.
Yeah, and I definitely think that, I'd like to see more stuff out of this than the sell side. We kind of see a lot of the big banks and stuff. If there's opportunities for these like Substack platforms and subscription platforms to add this value on a whole nother level of research instead of just the kind of typical language and circular EPS estimates, I'm all for it.
And yet, Thomas, I do wonder if it was written by AI. I'm 95% sure that this is actually happened, but I don't know. These guys at Citrini Research, they just made up a huge story that was also well written, but also, objectively untrue unless they have a time machine. So, could they have done it again and just it masquerades as fact? It could be, and I have no way of verifying that.
They need to drop some footage. That's what needs to happen.
Yeah. But even that now can be AI.
Yeah.
It's we're kind of in this can't trust anything moment. We're now seeing, but we are seeing the impact on oil markets in terms of we are seeing more ships go through Hormuz. So Brent oil, which is that international oil contract, the one that is mostly tied to the oil coming out of Hormuz, is down to about $108 a barrel. But WTI oil, which is the American oil contract, is up to $110 a barrel. Brent oil had traded at upwards of $15 or even $20 per barrel premium to WTI because of the SPR releases here in the United States, as well as the fact that the United States oil was a little bit more insulated. But now that oil is actually going through the strait, we're seeing Brent trade at a discount to WTI, which suggests that as Americans, we're actually paying higher prices. So I thought that was interesting to note. It is important also to note that there's a lot of talk and kind of misinformation about this. The U.S. is energy independent, but we're not oil independent. We produce about 13 million barrels of oil a day, which I think is among the highest. It might be the highest in the world. But we also consume 20 million barrels of oil a day. So that's a 7 million barrel delta, and that's not going to close anytime soon. Where we get most of our energy and why we can say we're energy independent is because natural gas. So a lot of the shale plays here in the United States are incredibly natural gas rich and oil weak. So Permian Basin, it has a lot of oil, but a lot of other shale plays are much stronger on the natural gas side. So obviously that's great for our electricity costs and could help with a lot of data center costs going down over time as well. But as far as oil is concerned, jet fuel, gasoline, distillates, asphalt even, you're seeing all of that, plastics, all of that is going to have some inflationary impact unless we can get this oil situation resolved. So that's where we are on the oil side. But so we're seeing a little bit of relief in markets today, up slightly as oil comes down. But overall, the economy is doing pretty well. And we talked about this on Thursday, and I had drafted much of the market memo on Friday morning, super early, before the jobs number came out. And I was really hoping that the jobs number would at least be in line with estimates so I wouldn't have to rewrite the memo. And in fact, it actually really supported what I had already written in the memo. And not because I was a super user, but just because that's where the data is pointing. And the data is pointing to a strengthening economy despite the Iranian issues. We talked about ISM manufacturing. We talked about the regional Fed indices. But we had some really good jobs numbers as well after a weak February because of those hospital strikes and some other things that were going on. We had a really strong month of March. Instead of losing 129,000 jobs like we did in February, we actually created 186,000 jobs. Manufacturing jobs were up 15,000, and the unemployment rate fell to 4.3%. So that's all good. What's also interesting, though, Thomas, is the average hourly earnings, even though the unemployment rate fell, The Phillips curve would say that you should actually start seeing higher inflation. But we actually saw average hourly earnings decelerate from 3.8 to 3.5%. And the month-over-month number fell from 0.4 to 0.2%. So even though the labor market is tight, as you'd think in terms of normal unemployment numbers, 4.3% is very low. We're seeing, because job switching is tougher and tougher right now, and hiring rates are pretty low, we're actually seeing that there's not that much upswing in terms of wages. In fact, there's a bit of a downswing. And so if I'm looking at these data and I'm seeing average hourly earnings go to 3.5%, either, if I'm the Federal Reserve, I'm saying that we're going to enter a period of stagflation where people are losing purchasing power in real dollars because inflation's going to go above 3.5%. I'm not saying that, but I'm saying either that's the case or average hourly earnings are going to be a depressant on the economy and inflation's actually going to go lower, notwithstanding the oil prices. So that would be my conclusion. But either way, this would point to lower overall economic growth unless the Fed does something. Any thoughts on those?
At least on the average of the hourly earnings, I wonder if that has a little bit to do with, I think that with how tight the white collar job market is right now, with a lot of, I think that the era of just job hopping and switching for higher pay increases is kind of just over. Especially, we're seeing a lot of big tech layoffs. And I think that a lot of people that would normally be horizontally hopping for another job raise in a similar industry really aren't able to have that flexibility that they previously had.
Yeah, I mean, if you look at layoffs.fyi, which tracks layoffs in the tech sector, and we're basically at the highest level since early 2022, which is when Meta was doing its age of efficiency. Amazon laid off, I think, a couple 100,000 workers. And we're getting closer and closer to those numbers now. I mean, obviously, we saw the big announcements from Oracle and IBM and Meta, and we even had Coca-Cola and BlackRock earlier in the year. We're seeing that persist. And I think that you're also seeing, to your point, the white-collar job attrition is hurting with mix in terms of the average hourly earnings. So maybe you have more people working, but maybe it's more of the manufacturing jobs, and maybe it's fewer of the lawyers and high-tech workers. So that might also be playing a role in the average hourly earnings number. I think that's a great point. Later this week, we do get FedEx Freight Investor Day on Wednesday. I'll see if they have an update on anything that's going on in the world of freight. We also get the meeting minutes from the last Fed meeting and a 10-year auction on Wednesday. Obviously, today you have the big announcement from Trump at 1 p.m. He'll have the press conference talking about the rescue mission, as well as the, probably an update on what's going to happen in Iran. And then at 10 a.m. today, we also get the ISM Services Index, which is expected to soften just a little bit. But with an early Easter and with a stronger manufacturing number, it might not weaken all that much. The economy is doing fairly well despite all of this turmoil in oil markets. And I think that is really defying a lot of the naysayers out there. And obviously, the longer the oil market regime persists, it's going to weigh on economic growth. But we're not seeing that at all right now. In fact, quite the opposite. So with that, I hope you have a great day. We'll be with you again tomorrow morning. Bye.